All right, welcome, Miss Jimmy. Welcome to another edition of Behind the Leads. We got Craig Bredbenner he's actually with TransUnion right now. Been in the mortgage industry for 25 years. Probably a lot of people know him, have talked to him at some point or connected with him at some point over his long career. So, Craig, thanks for jumping in Behind the Leads.
Yeah, welcome. I'm excited about it. It'll
Good.
be fun to chat through my story.
Yeah. So we always like to start at the very beginning. Where did you grow up?
Ha! I grew up very close to where I am today. So I grew up in O'Fallon, Missouri. So
Okay.
the suburb, I want to say about 25 miles west of downtown St. Louis, Missouri.
Okay.
And I have actually lived here all my life, with the exception of a couple summers that I lived in Southern California with some cousins. And then I went to the University of Missouri and I lived
Oh,
in Columbia, Missouri while I was in college for
wow.
4.5 years. So yeah,
Very cool. What did
yeah.
your parents do growing up?
My parents are actually part of my story. So I'm glad you asked that.
Yeah.
My mother is a nurse. So she was a registered nurse and she was an OB nurse. So she
Oh, wow.
delivered babies. So maybe
Dang.
somebody out there that's listening to this maybe has come across my mother. Maybe she helped deliver one of their children or them somewhere along the line. And then my father worked for AT&T and consult a couple different consulting firms, but mainly worked for MasterCard, the
Hmm.
credit card company. He worked there for 28 years. And so part of all of the things that I know and that I did actually spawned a lot from shadowing my dad. He was the last line of defense for all of they had, I want to say close to 8,000, they called them mainline or mainframe inline processors. So think of all the smaller computers that are out there in the world that all translated the credit card transactions to the mothership. My dad was actually the senior tech, that anything that got escalated to a point where it got broken on any of those 8,000 PCs or computers that were located all over the world, he
Wow.
was the last line of defense. So he was all over the place. He was in Egypt, he was in Panama, he was in different countries all the time talking to people about those processing computers. It was
Was
pretty
this
wild.
in the 80s, like 80s, 90s, or
It
what?
was he started in the 80s and
Yeah.
then he actually retired, I want to say now probably like 10 years ago.
Yeah.
But
Wow.
yeah, I mean, I grew up with, I still remember the day in our basement of my house where my dad had all of this equipment set up so that he could actually like work remotely at the time, which was a novel thing back in
Uh,
the, 80s and 90s. But he had a complete data center set up in our basement that mimicked what they were actually working on. And I still remember when we logged into through I mean, it was like a super slow, whatever it was, like 7 kilobit modem to like the
uh,
local library. And I remember the day that he showed me, it's like, this is the internet, son. And he's like, here's yahoo.com. It just went live today, right? And I had no
wow.
idea what I was in for at that point. So it was
That's awesome.
yeah, great role model from that perspective.
That's awesome. So in high school, are you a sports guy? Did you play sports?
I
What was your
did.
background there?
Yeah, so a lot of people laugh because they talk to me and I look like I got a small head on camera, and then when they meet me in person, they don't realize that I'm 6'4" and I weigh
Oh,
200
wow.
pounds. So
Wow.
I'm a pretty large dude. I played basketball, I played baseball, and then I also played tennis when I was in
Wow.
high school. But I
So
mainly played basketball. That was my sport.
nice. So very athletic guy. That's awesome.
Yeah.
All right. So you're St. Louis. You find yourself um at the University of Missouri, the
Yep.
Tigers, right? Yeah, the
The
Tigers
Tigers, yeah, the Mizzou
in
Tigers.
Columbia. What was
Yep.
you go there, you probably never heard the word mortgage by that point, right? What are
Nope.
you thinking you want to do in life at that moment when you're in
Uh,
college?
Well, one of the things that I really gravitated to when I was in college, because it was the late 90s,
Uh-huh.
that was the verge, or I guess the start of the big dot-com boom. So when I got into college, what I ended up recognizing was that I could get straight A's in all of the computer classes because I knew how to do everything. So
Mhm.
I actually knew Excel, I knew how to build PCs, I knew, all of the kind of things that most people in the business school were struggling with. And so I had a choice to make and that choice was, do I go all in and do I become like, take like C# programming
Mhm.
classes and get completely immersed in like the technical side of, college and go that down that path? Or do I go down a path where I would see that I could use those skills for business purposes as well? So I actually chose the business path. And what I had aspired to do was get an MIS degree and a business degree. What I ended up doing was I ended up being there for 4.5 years, and all the elective classes that I took were all web design classes. They
Mhm.
were all like database management classes and really pseudo like computer programming classes for business. And I just excelled in that because I just knew all those things from being around my dad. I had like
Wow.
learned all those things while I was in high school and as a youth from just being around it. So
Mhm.
I did that plus I got a finance degree. So I have
Dang.
a finance and banking degree, and that ended up leading me to the mortgage business in a couple different ways. And to go back and answer your question is that of all things, I had a class, it was my last year of college, and it was called the Warren Buffett Way. And it was all just the study of the way that like Berkshire Hathaway and Warren Buffett and Charlie Munger actually did business. And as a part of that, there was a person that came in and talked about mortgage-backed securities. And I was like, what the heck is a mortgage-backed security? On this bookshelf behind me, I literally have the book that this guy
Wow.
that came into that class and like he wrote the book. It's a, monster book about mortgage-backed securities and financial derivatives. And I just read that book and took to it and like, tried to
Wow.
like get an understanding of it. And that was really my first exposure to like what a mortgage was, how it worked, how it was used as a financial vehicle. And little did I know that I would end up getting into the mortgage business really kind of because of my interest in it.
So you finish school, you've got a
Yep.
degree in finance, you've got almost like a minor in computer science, which I mean,
Yep.
kind of,
Kind
which is
of.
also a really good to this day is a really good way. Maybe you flip it now. Maybe it's computer science as your major and then a finance. But man,
Yep.
that's a pretty solid way to get through school.
Yep.
Um, and then it's what, 2000, year
It
2000,
was, yeah, I
2001.
graduated in December of 2000.
So the
So
market's rip roaring, stock
booming.
market all time
Yep.
high. Internet companies is the way to go. You're reading
Yep.
about you're putting yourself to sleep at night reading mortgage-backed securities from
Yep.
probably the pioneer, the guy that wrote the book, literally wrote the book on it.
Yep.
That's pretty awesome. So you graduate. What was your first job? Do you remember?
So you hit all those things on the head. And to top it all off, while I was in college for the last 2 years I was there, I worked 3 to 4 days a week at an internet service provider. So I
Mhm.
was actually on the IT staff of an internet service provider while I was in college, a company called Socket Internet that's based out of Columbia, Missouri. And I was 2 of the days a week, I was actually on the sales team. I was the only person in the whole company that was a salesperson, and I was on the help desk as an IT person for a couple days of the week too, as a college student. And so when I graduated, I had this finance degree, knew my way around finance. I had actually done an internship during the summer before I graduated with Wells Fargo. In the finance, I was actually working for a Wells Fargo finance branch. And I did like a
Mhm.
handful of mortgages while I was an intern. So I knew the mortgage business and my way around that. And lo and behold, guess what I chose to do? I chose to actually work as a it was basically a technical associate. So it was technical sales support for the United States, all of the US, and some international, for the Americas, basically for like Canada, North America, and South America. I went to work for Lucent Technologies. So I don't know if you remember that company at all, but it was at the time, it was a derivative of AT&T that had spun off, and they were huge. And when I started
Wow.
working there, January of 2001, they had 136,000 employees in the United
Holy
States, or in
cow.
the world, not in the United States. And I they immediately took me and they sent me to Alameda, California, to one of their they bought a company called Ascend Communications that actually made the internet work.
Hmm.
And they sent me, and I did 3 months of immersion training to become a wide area networking, like, technical specialist. So I was the guy that when somebody was trying to buy all the equipment that made the network work, or the internet work, the salesperson would defer to me to help them, like, be
Sales
the,
engineer. You're
yeah,
like the
basically
sales
the, like,
engineer.
engineer the product. So, and all that's related to what I do today too, which is crazy.
Yeah.
25 years, ago, and now it's still relevant. So I decided to go down that tech path, and guess how long it lasted? It lasted a whopping,
About 9 months, right?
yeah, whopping, it lasted 9 months. It actually lasted six.
Oh
So
gosh.
I came back from training in California, and I came back to my job, and half of the team had already been let go.
Wow.
And myself and three other people that were at the training, they were so far behind at doing all of the HR paperwork in order to enroll us as new employees, and they were busy laying everybody off at the rest of the company, that they kept us for an extra 2 months, even after they had already told us they were gonna let us go.
Holy
So
cow.
it
So
was
you
wild,
went
wild
through
times.
two
Yep.
of the biggest boom busts in that 10-year period. We'll talk about that later, but that's pretty interesting that you got to go through that so early in your
Yep.
career. Although it wasn't in mortgage, but you got to kind of see the writing on the wall, like, oh, this is what it looks like when things start to melt.
Yep.
Um, funny story is my first day in mortgage was May 1st, 2007. So my birthday's May 1st. I know that was the
Yep.
first day I started at Bank of America. And it was like same kind of deal. It was like a year before what, 8 months, 10 months before the market
Yep.
starts to melt down. But um, so you so you realize, hey, IT, software, probably got to put that on the back burner for a little while
Yep.
because of the market. And did you start your curiosity kind of go back into the mortgage side after
It
that? And you're
did.
still in, but did you move to California? You still in St. Louis?
No, it was actually, the job was in St. Louis, and
Okay.
just the training was in California. So I
Okay.
came back to St. Louis. I remember that day vividly, when it was finally my last day. I actually went and saw my dad for lunch. And while I was at lunch, he said, "Well, what are you going to do?" And I
Uh-huh.
said, "I don't know. What do you think I should do?" And he said, "Well, I think that this whole technology dream that you have and the world that's around us is in rough shape right now." He said, Maybe you should lean back on the finance side of the business." And so, also very good advice.
Yeah.
So what I did do was that they let all of us go, but surprisingly enough, they gave me, I think it was like 6 months of severance, even though that I had actually only worked there for like 6 months. And
Mhm.
so I had a little bit of a cushion. And what I decided to do was I ended up going to, actually, a couple of my older fraternity brothers had started a mortgage company. And so guys that I knew from college, they were 5 or 6 years older than me, and they had started a mortgage company in St. Louis called Liberty Federal Mortgage. And so one of my best friends, still is my best friend, he actually was working for them. He was the very first employee that they hired, and he was their sales manager. So they invited me to come to their office for none other than my IT prowess, right?
Yeah.
So they invited me to come, and they said, "Hey, we know you have all these IT skills. We have this office. We've got, at the time, I think they had 16 loan officers, and they had
Wow.
I don't know, it was like 7 or 8 folks in like a what I would call a very cryptic call center.
Hmm.
And that whole group of people, and they had a couple processors and and a couple underwriters. At that time, it was, I want to say, middle of 2021, or sorry, 2001, and they had 2 fax machines that were multi-use fax machines. They had a single ISDN internet connection, which is basically like half of a megabyte of internet. And they had 2 PCs that they had their like LOS, POS like running
Hmm.
on, and everybody had to share those 2 PCs to put a loan application in. And so you're in this office and there's 16 loan officers and they're fighting over, like, basically to get on these 2 terminals. They were doing everything through fax. And those guys actually said, "Hey, we don't know how to do anything, right? They
Hmm.
barely could operate an Excel spreadsheet. What do you think about networking this whole entire office? We're gonna buy laptops for all the loan officers, and we'd like to do some automation of our call center." And of course, I was unemployed at that point and said, "Sure, what's it worth to you?" And
Yeah.
they paid me a lump sum to do all that. I did that over the weekend, over a couple like weekends in a row. Um, Set their entire office up, and then they said, "Hey, you know what? We'll hire you. We'll pay you this amount of money, per month to be basically our network operations person, right? And run all the IT that you set up here. And by the way, we know that you know how to do loans. We'll let you be a loan officer as well." I said, "Okay, cool. That's great." So I started working there. I want to say, I don't know, it was like July or something like that of 2001. Within 3 months after I networked their office, I had automated their telemarketing room and built a predictive dialer for their telemarketing room. Before that, they literally had telephone lines on a handset, and they were printing off Excel spreadsheets with phone numbers and people's names on them, and each person was dialing a handset. And so I automated their telemarketing room, and they went from generating, I would
Oh
say,
man.
less than 25 leads to over 100 leads a day. And
Wow.
so within just that like 90-day period after I did all that, they doubled their revenue. They went from
Jeez.
the first month I was there, they had like I don't know, it was like $170,000 in revenue. 3 months later, it was like 380 just on all of the.
Do you remember your first conversation? Because it's interesting. I started in mortgage when I was like 24, and I think it sounds like you were 23, maybe
Yeah, I was like
24.
23. Yep, yep.
And like, to me back then, $100 was like, great, man, we're making $100 on these. When did you have your first conversation where you're like, how much do you make on a loan? Do,
Oh
do you
yeah. Oh
do you
yeah. Well,
remember what
I'll
like in
tell
the
you.
bell it goes off and you're like, what? You made
Yeah.
so tell me
So I
how was that?
absolutely, I absolutely didn't understand it when I was an intern at Wells Fargo, because I had done a number of loans and had no idea like what kind of dollars were being generated on those loans. I was an
Hmm.
intern. I didn't really understand it. When I was going through that process of automating their call center, and the time that when I figured out what was being generated on a loan and the amount that a loan was worth, when I was interacting, of all things, with the telemarketers. So this group of telemarketers were back there, and the way that those telemarketers were paid was not on applications, is they were paid an hourly wage, and then they were paid anytime a loan closed, which you can't do that anymore now with the
Hmm.
regulations. But back then, they could get paid, and they were paid for each transaction that was closed, and they were paying them $100 or $200 a loan every time that a loan would close. And I was just blown away by that. I was like, well, wait a minute. if you're getting paid $100 or $200 per loan, what are these loan officers getting paid, right?
Right.
And so I started doing the math backwards and figuring out that, each one of these transactions that was being done was, if it was $100,000 transaction, there was generally somewhere in the neighborhood of 5,000 to sometimes,
Hmm.
more dollars to be made on each one of those transactions per like, each $100,000. And I just couldn't believe it. And
Hmm.
so I that was where I figured it out. I basically started doing the math backwards, and it ended up I was only there for 4 months. And
Wow.
yeah, and so I was there for 4 months. The people around me and the other folks that work there, including I hope that we can talk about some of the people that have kind of come through my life that are still in the
Yeah.
mortgage business at one point, but a couple folks that are still in the mortgage business today. Four of us they came to me and said, "Hey, wow, this is crazy. We can't believe how you did this. Let's leave these guys and start our own mortgage company." And I was again 23 years old and was like, "Sure, I'm up for that."
You're still living at home, right?
I
You're still like,
was.
oh,
I was living in the basement of
right.
my parents'
Right.
house. I just
I just need
graduated from.
$500 a month to live.
That's
I
right.
can
I'm
do
like,
whatever you want
cool,
me to
let's
do.
do it. I'm like, maybe I can pay my student loans off early,
Right.
right?
That's awesome. So,
Yeah.
so you learn the ropes with these guys. You realize your niche is kind of like this high performance IT meets loan officer marketing kind of niche, which
Yep.
is actually still to this day is super valuable to know how the networks work. And so you got these couple guys. You guys y'all actually start your own
We did.
mortgage
Yeah.
company.
So we
Same kind
for
of deal, direct to consumer, right?
same thing, just rinse and repeat basically. So the company that we first started was Midwest Lending. It was myself, my buddy that had introduced
Mm-hmm.
me to Liberty Federal, a guy named Rob Kaiser, who has since actually unfortunately passed away. And then a person that many people that are going to be on this, that are listening to this know, Todd Jenke, who is the SVP at Mutual of Omaha now in their direct
Mm-hmm.
to consumer channel. And
Wow.
so the three of us started Midwest Lending. We first were of all things, for the first like month, we my of all things, my dad was like, "Sure, we've got this basically IT center set up in our basement. Why don't you guys just run it out of our house?" So we ran it out of my parents' basement of all things for the first
Wow.
like month and a half or so. And then what ended up happening was that uh, Todd and Rob, who are great guys, they were older than us. They were older than myself and my buddy Sean. We were 23 and 24, and they had like completely different dreams of like we're going to go big or we're not going to do this at all. And the two of us were like, wow, we've got like $10 to our names and
Uh-huh.
20,000 or $30,000 in student loans. So we ended up only doing that for, I don't know, maybe 2 or 3 months.
Yeah.
And then Sean and I decided that we were going to just do it ourselves and we were going to do it on a small scale. And so we left amicably, right? We actually parted ways. They went and did their thing. And we helped each other. We actually still all remain friends and helped each other. And Sean and I we ended up leasing a small office space, actually pretty near where my family lives in O'Fallon. And we started off with just five of us and two telemarketers, and we started Quest Mortgage. And so
Dang.
that was what we did.
So and actually, I mean, this was a great time to get in the mortgage business because the refinance boom of
Booming.
the early 2000s was huge, bigger than
Yes,
COVID,
booming.
right?
It was
And
booming. I mean,
where
it
did you
was
get leads from back then? Where were you finding these people?
all telemarketing. So there was no do not call list back then.
How do
Um,
you just call people? Like, what kind of
No,
people did you
no, no,
call?
no, no. It's all this all comes full circle back to where I'm at today. So,
Wow.
yep. So the guys from Liberty Federal that we had worked for, they essentially were sourcing, we'll call it ITA leads, right? So today, many of the big, well, including, TransUnion, but many of our competitors, they source all of the property data across the United States. So what we were doing at the time is still the same thing that people are doing today, honestly, was that we were going and getting the deed data. There were aggregators that were aggregating that deed data. We could tell based off of what type of loan it was and what was recorded.
Mm,
If it was a subprime loan, if it was an ARM, it was conventional, if it was VA, we knew enough about the actual loan dynamics. And then what we would do is we would just go append all of the contact information for those people from another append source. And so we had all the mortgage information about somebody, really no credit data around them, but you could kind of tell based off of demographics, the type of loan it
hmm
was, like what the situation was with those folks. And then we got all their contact information. So phone in particular at that time, email wasn't even a big thing back then. It was
hmm
basically you contacted people over the phone. And that's what we did. We basically handed the like lists of all those. I would collate all that information. I would actually like add and take away information from it. And I would identify like the juiciest like tranches of like areas
hmm
and like places to have our telemarketers call. And they literally would just call all day long and say, hey, this is such and such from, Quest Mortgage. We would like to give you a free evaluation of the mortgage that you have on your home. We'd like to offer you the opportunity to consolidate debt if you have debt. And they just, started a conversation with people.
Wow.
And they would essentially take what was almost a full application over the telephone. We would get consent to pull their credit. And after we got consent to pull their credit, it would get handed off to a loan officer. That loan officer would pull their credit and basically work up a loan scenario for them to either consolidate their debt, save them money, or help them purchase homes. You'd be
hmm
surprised how many folks that you'd call up and yeah, I have my house listed right now. I want to buy another house. Okay, cool. We can help you with that. So it
hmm
was kind of all the above. And basically, that's how we did business. And at the same time, myself, my partner, the other couple loan officers that were with us, we were out building relationships as well, kind of the old, shaking hands and making sure that people knew that we were in the business and networking. And so we got a combination. It was roughly, I don't know, I want to say like 60 to 70% like driven off of all of the like telemarketing lead gen. And the other like 30 to 40% was self-generated relationships, kind of the old school way of being a loan officer.
Dang. When do you think, when did Kansas City and St. Louis become a direct consumer hub? Was it around 2000,
It
around that
was.
time?
So yeah, like all these people
Because
are
it
all
didn't
connected.
exist before that,
Yeah.
right?
Yeah, they're all connected and oh man, we're gonna get into like more, but yeah, it was it really actually it really started happening in the late 90s. And the reason that it started happening in the late 90s, and it was even before I got, fully immersed in the mortgage business. I just knew it from, people that had been in it previously. Was it in, I want to say like 93 through like 97. That was when all of the what we now call non-QM like programs came out, but it was all the original, I'll call them the OG subprime
Oh,
mortgages were first being derived. And so when mortgage-backed securities started getting issued in the 90s for, basically non-agency loans, that is when all of the like mortgage business from a direct to consumer started popping up. And it happened in the Midwest. And the reason that it
why?
happened in the
Yeah.
Midwest is because of the time zone. And so
Uh,
the time zone in Kansas City, the time zone in St. Louis is Central Time Zone. And there are an inordinate amount of old school mom and pop banks and also like lending institutions that were looking for like new ways to actually like make money. So they were giving capital to people like us to be able to, to do loans. And that's where a lot of it all kind of spawned from. So,
Interesting. Who was,
yep.
if you're going to say the person or the group that was the original, do you know who that
The
is?
OGs. Oh man.
They still exist,
Yeah, like
but
yeah,
they're all scattered?
one of the OGs is McGuire Mortgage that actually got bought by First Horizon. They were in Kansas
Yeah.
City. Um, the Brown brothers, I don't know if you guys, Carly Brown Mortgage, I don't know if you
Okay.
remember that company from the 90s.
Yeah.
They also got bought by First Horizon where I went and worked
Wow.
at. One of the like OG companies that's still around from St. Louis is Delmar Financial
Yeah.
Corporation,
Yeah.
and they're still here. Actually, some of my old employees actually run the operations of that company.
Wow. That's interesting.
Yep.
So you do Quest Financial, right?
It was Quest Mortgage
Quest
Consultants is what it
Quest
was.
Mortgage Consultants.
Yep.
You guys are rocking and rolling. How long? What's happening there? How does that thing wind down? What's
Yeah,
going on there?
so we went from five of us in 2001 to at the end of 2001, we were cranking just in like a couple months, just because we knew the path that we were on. And so we moved to I want to say it was like a 5,000 square foot office. And I hired a completely automated like telemarketing room. I actually had between 10 and 14 telemarketers going 5 to 6 days a week. And then we immediately just started bringing on loan officers. So we ended
Were
up
you,
with,
hey, were you hiring your buddies? Like you're
oh
23
yeah,
or
oh
four. Who
yeah, it
do you
was
know?
like, it
Like you
was
don't know any. How do you fill the seats?
We actually
How do you,
had people that want, so many people in the mortgage business actually came to us, even though we were young and dumb in St.
hmm
Louis, because they knew that one, we were very educated. They knew our reputation, and the wholesale lenders. So obviously we were a broker slash, banker. The wholesale lenders loved us and they loved what we were doing. And so they would go and tell other people, that like the other, mortgage companies that were their clients, like, hey,
hmm
if you're looking for a great place to go work at Quest Mortgage. And so
Wow.
we would just get people that would walk in to our office and they'd say, hey, I'm a mortgage broker at like such and such company, and this person from, Interfirst Wholesale Lending told me that you guys are like blowing up and this is the best place in town to work. You know, I'm interested in coming to work here. So we just
hmm
had organically, like we just exploded within like a year just because we knew what we were doing and we were
hmm
doing it like well, and we weren't, we weren't like I want to say kind of, I don't know, shady. You know what I mean? We were
Yeah.
on the up and up. We were educated. We were smart.
Trying to do the
We were,
right thing.
yeah, we were doing like really like up and up business.
hmm
And I think that that was different than a lot of people at that time. There was a lot of folks that were out there that were just doing weird, nearly
Yeah.
fraudulent stuff. And
Yeah.
so
Were you like driving a Porsche? Were you guys making a ton of money?
we were
Like what
making a
was
ton of
the
money. Yeah, we were.
what were you doing with it at that age? I live in Miami now.
um,
These 23-year-olds, I mean, they're doing
I
crazy stuff
know.
with their money.
We had two sets of season tickets to all the Cardinal baseball games. We had season tickets to the Blues. We had, I don't know, we each had we bought new cars. At the time I had like four cars.
Yeah.
I mean, we spent money like crazy. I cringe at it now because we did a lot of cool stuff for all of our employees, right? We took
hmm
everybody everywhere. Every weekend, because you're young or 24 and 25 years old, is if anybody wanted to come, it was open bar anywhere that we went. It was, just I don't know, it was just fun to be alive at that point. And we kind of just
Yeah.
did whatever we want. We took every 6 months we did a competition, and the people that qualified for it, we take them to like Cancun. Like we'd take like 20 of us to like Cancun like every 6 months, or we take us
Dang.
to like Jamaica or like Dominican Republic. And like we were just doing fun stuff that you do when
hmm
you're making hundreds of thousands of dollars a month, right?
Yeah.
And you have no like recognition that that can actually stop.
All right. Well, so how long did it go for? How long did you guys
It went
continue?
to, so 2005, we actually had the
For
best year. Yeah.
it went that long? Five
Oh
years,
yeah,
6 years?
2005, the company made, I think our revenue was like $4.8 million dollars.
Wow.
Yep. So we went from oh 01. '01, it was close to, it was, I don't know, I want to say like $700,000 in only like, 3 or 4 months. 2002, it was 3.2 million.
Uh,
2000, 2003, it was like four something. Like 2004, it was like somewhere in that like range as well too. Um, and then this is what happened. We got to middle of 2005, and I'm a very analytical person. I still do that stuff today. I we had built our own CRM platform, so which would rival some of the CRM platforms that are even in existence today. And so, um, again, very technical, built the CRM platform that basically tracked everything that we did. And I did an analysis and I looked at all the loans that we had done in the previous, we'll call it like 3 years. And if interest rates went up by 50 basis points, and if the housing market and the value of homes went down by 10%, I did a calculation and we would have only done like 40% of the loans that we had done in the previous years. And so at the beginning of 2005, I went to my business partner, Sean. It was just the two of us and said, man, this is not good. We're either going to have to like be ready for this to downsize, or we're going to have to like look for somebody that has like more capital to like potentially like purchase us.
mm,
So we ended up reaching out to a business broker, and a lot of people had already like reached out to us because of that. There was a lot of notoriety around us and like what we were doing in St. Louis. And this business broker was like, yep. It's like, I can find somebody to buy you guys. It's just got to be the right fit for you. So for the first part of 2005, while we were having this banner year, we were interviewing with just different national lenders to like become either one of their branches or for them to acquire us and make us a division of their company. And one of those companies was First Horizon Home Loans. And so we went through the entire process of basically agreeing with them to get acquired by them, signed all of the prerequisite paperwork. They came in August of 2005. I'll never forget it. They changed the signs on our building.
oh no.
They brought their entire IT staff in.
Oh
They
no.
brought their HR staff in and they enrolled all of our employees in there, like gave them all employee IDs and enrolled them in like all the HR benefits. And they did that under the guise that we were going to become a branch or like a division of First Horizon Home Loans and their like direct to consumer channel and support their national like DTC organization. And they about 2 weeks later sent us the final contract, and in that contract made myself and Sean, my business partner, both personally liable for every loan that we had done in the past if there was ever any litigation on it. And the attorney that was represented us told us that we were crazy if we signed this agreement.
Wow.
And so we went back to him and said, hey, we're not going to sign this agreement unless you basically take us out of this from a personal liability perspective. Because mind you, we'd made a bunch of money, but we had also closed like a $500 million, maybe like close to like, uh, I don't know, $750 million in mortgage loans and
Right.
basically in like 4 years. And if anywhere
Three,
along the line,
right. Three
yes,
of them go sour. You're
three of them
screwed.
go south
Right.
and there's some type of like issue with those, and they come back and they put the liability on one of the two of us, it would ruin the two of us. And
Hmm.
so we ended up walking away from that and telling them no. And here's where things ended, right? Is that I actually was approached by them and the person that ran all of basically consumer business at First Horizon. He was the president of basically direct to consumer at First Horizon. He was part of the due diligence team when they were going through due diligence, and he came back to me and said, "Hey, what's it going to take just to get you to leave? We'll buy you, and you leave your business with Sean and come and work with us." And I was like, "Well, that's going to take a lot." So I ended up going down to, he was based in Memphis, Tennessee. I ended up going down and visiting with him, and he's like, we're ready to do this if you're ready to do this. I signed a 2 year contract with them. I divulged my half of the business to my buddy Sean, and we talked about it beforehand. And I said, "What would you do if this was you?" And he said, "I would take that deal." And so I ended
That
up
is
leaving.
amazing.
Yeah, I ended
Oh
up
my,
leaving everything behind to Sean. Um, and he ended up staying in the business for a couple years, and then he sold the business to actually the original guy, Rob Kaiser, the guy that had passed away, that was
mm,
our, partner at Midwest Lending. He sold Quest Mortgage to him, and he turned it into the biggest, well, it was either the biggest or the second biggest branch of USA Mortgage here in St. Louis. So DOS
wow.
acquisition, yep. So,
That's incredible.
yep,
So, what did you learn, when lenders today are wanting to sell their mortgage company? Because it happens in waves and
yep,
things.
yeah.
It seems like you were ahead of the curve on that. I mean, obviously 3 years ahead, I don't know if you even knew what was going to happen, but is there any advice you give these mortgage lenders
Yeah.
that are trying to sell their companies?
My advice is that one, obviously based off of that story that I just told, is to get to the point fast, meaning that if you have the opportunity to sell your business, get to the contractual terms and liability terms and what everybody wants without playing around and without, like talking about it for months or without
Hmm.
making presumptions. Get straight to the point fast. And so either kill the deal or do the deal fast is
Yeah.
basically my like biggest advice, because the longer that you draw it out, the more risk it puts on you and your production and your people and what that like, company is actually buying, right?
Hmm.
Because the longer that you like, play around with it, the more you're making yourself liable for your employees to be like, what are these guys doing, and figuring
Hmm.
out what's happening. So
Yeah.
that's number one. Number two is that, it's hard to like value a mortgage company. That's why it's, such the wild, wild west that it is today, where you can't really figure out like what the value is of a mortgage company. Your assets are worth nothing, meaning like
Hmm.
your office, your equipment, whatever it may be. What's worth something though is if you have any like true like intellectual capital around, just the way to operate. And
Hmm.
so my advice, and the second piece of this, is that if you really are wanting to sell your business, what is something that would differentiate you, that would make it valuable for you to actually like fit in and merge with whatever, place that you're selling
Hmm.
to? And
And for
then
your example, is the IT side.
it
You
was.
felt like that was what people were wanting. That's what made them interested.
They wanted our like CRM platform. They wanted like my like marketing know-how. They wanted like
Hmm.
the, basically like how do you actually build like the lead gen and like
Hmm.
the like linkage of all of the
Infrastructure.
leads and infrastructure behind all that. And that's
Yeah.
what I ended up doing. I ended up, I went from my company that had, I would say at our peak, we had like 43 or something like that employees in total, that I took this job as the VP of direct to consumer programs, working for the president of direct to consumer at First Horizon. I immediately had essentially 926 people in call centers across
Wow.
America that were reporting to me overnight. So
Wow.
it was pretty
Hey,
wild.
so did you find it? Because I have found entrepreneurship hard. It's difficult. It's a grind, but
Yep.
it seemed like yours was pretty like a hockey stick. Did you find it
It
hard?
was, yeah, here's what I everything that we did actually just like it worked out like too well, right? So it was a hockey stick. I will tell you this, like I was young and much more disciplined than I think people that were
Mm,
the same person at that age.
yeah,
So
yeah.
I was giving
You
up,
were very focused.
yeah, I was giving up my Sundays to go in and like, back up our network, right? I
Hmm.
was, I was staying because I managed I basically managed the call center and the call center activities. So, the telemarketers were there until 8:30, sometimes 8:45 Central Time. So I'd get in the morning at,
Mhm.
we're gonna say, like 8 a.m., 9 a.m., and I'd stay there till like 9 p.m. almost every
Mhm.
day, right?
Mhm.
So I wouldn't say I was working that a whole entire time, like grinding away, but I was willing to sacrifice an inordinate amount of time. And luckily, my partner was the same way. Both of us had that same work ethic. So while we saw success from it, like monumental success, to tell you that if I were to do that all over again tomorrow at this stage in my life, I would cringe and throw up all over myself to say that I'm
Mhm.
gonna like work the same way that I did for those
Yeah.
same 5 years.
Yeah.
And so
It's it seemed like, and when you talk about partnerships and you start a business with one person or one other person or two people or three, I've so for Banking Bridge, I am on the business side of things, and then my co-founder Jack, he's a computer engineer. He can't do my job, and I cannot do his job, and it makes the partnership a lot easier.
yep,
Did you find that with your
we
partners where
did.
they can't do your job, and you're a sales guy, but it's not a you're not a natural. Maybe you are now, but back, did you find that helped? Like not even
Yeah,
knowing it helped.
it was actually like, so a yin and yang relationship like that is the best, right? And
Hmm.
so we had everything divided up in the company. Sean did all of our like accounting and payroll. He managed the actual like loan officers and helped with all of the he managed like our secondary markets
Hmm.
and like all the like loan sales and delivery and all that piece. I was the backbone IT, but the marketing lead gen, right? Like he
Hmm.
didn't have any like real thing to do with it. We had divided and conquered like perfectly. And
Hmm.
so I totally agree with you. If you go into business with somebody and they have the exact same skills that you
Right.
do, then you're gonna end up like butting heads because it's kind of like if you're on the same basketball team, there can't be two point guards,
Yeah.
right?
Yeah.
So, if you're both equally like great at being a point guard, or you're both equally great at like,
Rebounding or
being,
something,
yeah,
right?
like
Yeah.
rebounding, you're gonna end up like butting heads with each other. You're not
Yeah.
gonna be complementary to each other.
Yeah. Yeah.
Yep.
Yeah. I would agree. So First Horizon, it's your, you're in, now you're working under somebody. You're no longer the boss, but you're ahead of a huge 900 person
Yep.
sales team. What were some takeaways from your time there? This is right
Oh
before
yeah, yeah.
this is what, '06 to
This
2008-ish.
this was I started in January of 2006, January 1st. So I left Quest Mortgage behind me at the end of 2005, and I was there until December 31st of 2008. And so it was
Wow.
3 years exactly. And
Wow.
the wheels didn't start to fall off until really like the start of 2008 at First Horizon. And so for the first couple of years that I was there, we were going gangbusters. And
Hmm.
I was like the hot ticket. I was like the guy that had like new ideas and the way that things should be done differently. We built an entire brand new LOS and POS system in tandem with Tavant, who's still around today.
Hmm.
We re-automated all of our call centers. So we had a call center in Overland Park. We had one in Memphis, and we had one that was in Irving, Texas, where the headquarters were. I oversaw all the activities around that with the person that was also the sales operations manager. Um, we had
And that
two
was
point
was that still all phone outbound? Not a lot of
all
emails.
phone. It was all
All phone.
phone, inbound and outbound. So that was my job. Was actually one of the first things that I did there was that I did this with my own company, because by the time we got to the end of 2005, we started generating our own web leads. We started buying web leads from lead aggregators. We were telemarketing, and we were doing other type of lead gen. And I figured out through all the analytics that I was doing at my own small company that I couldn't give the same leads to the same people and get the same results. And so I began segmenting my loan officers and only given like certain loan officers we'll call them like a certain lead type, right? Like
Mm-hmm.
a web lead. Well, this group of loan
Oh,
officers, they just get the telemarketing leads. This group of loan officers gets the other leads. If you give the same loan officer a smattering of all those different leads, your results become poor because they pick
oh.
favorites and they don't work those leads the same. And
So hold
so,
on. So you didn't you trained a group of loan officers to only work a specific type of lead. That's
correct.
that that had to have been like pretty innovative for the
It
time.
was. It was. That was the reason why they hired me to come and work at First Horizon. They were
Yeah.
like, this is crazy. And I showed
Wow.
him all the analytics around it and I showed him all the reporting that we had built. And so the gentleman that I work for, who is one of the greatest men that I've ever been around in my life, his name's Howard Graham. He was like, this is incredible. I need you to come and work with us because we need to do this in our call center environment at First Horizon. And so the first order of business when I got there was to take all the reporting and analytics that they had built, fortify that, and then figure out how to segment the loan officers and put them in a
Mm,
place where they only got certain leads by lead type. And based off of that, we absolutely like crushed our like
yeah.
conversion percentages from like the time, from the time frame before I got there.
So you would say it's not about the personality of a loan officer as much as it is putting them in a group and training. Like any loan officer can
Yep.
be trained to work a web lead, but it's a
Yep.
lot easier to train them to work web lead than to train them to work three types of leads.
That is correct.
That's
Yep.
pretty interesting.
Yep.
Dang.
Specialization on a lead type and a lead source is the gateway to higher conversion rates.
Yeah.
Yep.
Yeah.
So I still do that today with a lot of my customers. They, I sell information, I sell data,
Yeah.
I have them a lot of times like, have discussions with me about how they're doing things. And I end up like immediately going to that. Well, hey, think about this. If you give a loan officer a raw list, like let's call it a trigger lead, right? Like somebody to call off of where it's a cold call for them.
Hmm.
And you give that same loan officer an internet lead that you just bought from Lending Tree or MRC. Which one of those things do you think that loan officer is going to spend his time on?
Hmm.
Well, that's a pretty easy answer. They're going to go straight to that internet lead because that they know that person raised their hand and they have interest
Right.
versus trying to call somebody that's a cold call. So
Right.
if you start giving your loan officers, five different lead sources of all different varieties, they're always all the time, every time. It's, just science and just,
The path of least
human,
resistance. Right.
that's right. Human nature. They're going to take their own perceived, though. That's the
Hmm.
the thing, right? It's their own perceived path of least resistance. Even though one of them might be more fruitful all the time, they're still going to perceive one of them as like the path of least resistance for them.
Yeah.
So, yeah.
That's interesting. So when you, I had Jessica Gardner at Academy Bank on the previous episode, and I asked her in 2000 and 8, or for her it was COVID. When did you feel like what was the first indication that things were slowing down? Do you remember the like a
I
time or
do.
like what was happening?
We were at First Horizon. We had a whole division that is all the people from Kansas or Kansas City that you
Uh-huh.
you all know and love today. Um, that we were at the time, we were the largest home equity, basically line or loan, right? Either one, lender on the Lending Tree platform. And when I found out that things were unraveling was when, I don't know if you remember this, but everybody couldn't figure out when the mortgage business was like starting to like unravel why the brokerage firm that was online E-Trade was involved in that at all. Well, guess why? Because we were selling all of our home equity loans to E-Trade.
Oh.
And so where I figured out things were going south was that I got called into a meeting, and I want to say it was like towards the end of 2007. And I was told that we were going to have to basically decide if we were going to get out of the home equity lending business or we're going to try and find some other investor for all of our products, or we were going to have to portfolio those, within like the whole First Tennessee National, umbrella of companies.
Uh,
And I was like, why is this? And they're like, the loans that we have done and that we've sold to E-Trade, who then securitized those and sold them as, securities, they're deteriorating at such a rapid rate that they have completely shut down and are no longer taking on any loans anymore.
wow.
And that was my first indication that we were in big trouble.
Did
So
did it click from your time early in .com? Did those two correlate or not really
it
at that
did.
point?
It
It
did. It was
did.
kind of like a meltdown moment.
Yeah.
It was just I don't know. It just was like, wow, what's going to happen next, right? Like
Yeah.
what is um it was just I don't know. I can't describe it. It was me thinking to myself, okay, what's the next ball to drop? What's going to happen next? And then
Hmm.
all of a sudden things just started like really, really changing. All of the
Hmm.
subprime lenders that I used to like do loans with and had relationships with, they were all shuttering. Um, Many of the companies that had gotten deep into like the no income, no asset style of like, Alt-A lending, the pick pay loans, like all that stuff just like ended up like stopping like overnight. And then it was, well, what the heck is going to happen next is what was on my mind.
Hmm.
And then that's what happened next. I mean, within quick order, uh, basically between then, it was late 2007 through the middle of 2008, we were we were just completely, I mean, the wheels just fell off.
Yeah.
We didn't have investors for our loans anymore, so we shut that division down. We ended our relationship with lowermybills.com and Lending Tree. Um, we started to the overall First Horizon, company itself, which had, 5,000 employees. We had 368 branches and I think like
Mm.
3,000 loan officers. They entered into an agreement to basically divide the company up. So we decided to sell all of the servicing. And mind you, we were one of the biggest servicers in the US at that point. We had 2.3 million loans under service.
Wow.
We broke all those up. We sold all of the ARMs to Everbank. We sold all of the conventional loans to a combination of Bank of America and which it was Countrywide Bank of America, and then to Wells Fargo. And then anything that was left over, we just like broke up and sold it to the highest bidders. And we just shut down all of these like direct to consumer call centers, and they shut down the direct business, and they sold the retail business, all those retail loan officers, and all of the um, all the branches to MetLife, and they
Wow.
became MetLife Home Loans. And their whole goal was, we're going to weather the storm that's happening in the mortgage business by pairing up the MetLife financial representatives with loan officers from MetLife Home Loans is kind of like a referral partnership, right?
Hmm.
And that didn't last, right? So
Yeah.
I spent the last 6 months of 2008, I want to say 4 months. Howard, who was my boss, they moved him over to run the digital marketing for First Tennessee Bank, so the bank footprint that's in Tennessee. They moved me over and had me report to the chief marketing officer of First Tennessee National, and I became the what they call it, the mortgage. It was like dissolution, right? Like me basically like divulging all of our mortgage stuff. I'm the one that signed all the contracts and like undid what was essentially
Oh
like
Lord.
First Horizon home loans for the U.S. on all the
Golly.
I did that for the last like 4 months of my career there.
Wow.
Yeah, it was
So, all right.
wild.
So as we move through and we kind of wrap things up, we wanted to spend some time in your early career because it's pretty awesome.
Yeah,
You go to Citibank.
yeah,
So you
yeah.
go,
City Mortgage.
how did that happen? Was it,
Yeah.
was it,
So
was it connections in the industry?
it
Like,
was. So there's only so many people doing what I was doing. There still is
yeah,
today. You realize this, right? There's only
yeah.
there's only so many companies that are out there that have like massive servicing portfolios. There's only so many people that, I can name them, you can too, like the
Yeah.
people that were my peers then, and some of them are still like doing the same things at many of these mortgage companies. And so I had the opportunity after the divulsion of the, mortgage business. They asked me if I would stay and basically run or be the SVP of the mortgage division of First Tennessee Bank in the First Tennessee footprint, and then also Georgia and a couple of the like, neighboring states. But with that came, you're gonna have to pick your family up. You're gonna have to move to Memphis, Tennessee. And
Mm,
at that point, I was like, you know what? I'm kind of over this. This has not been a very comfortable situation to be the hatchet man, for the
hmm
last like 4 or 5 months of this. I'm gonna take a severance package, which was offered to me, and it was a very nice one. And I'm gonna actually, just see what else happens, right? And so January rolls around of that year. I'm at home. I decided I'm going to do some work around the house. I'm going to take some time off. Lo and behold, one of the things that I decided to do for my own education was that I decided to actually, I had all the hours and the project requirements. So I sat and got my PMP certification, my project management professional certification. And I was on my way back home from taking that test. And the guy that runs all of the direct to consumer marketing for City Mortgage just called my cell phone and said, "Hey, a little birdie told me that you no longer have a job." And I said, "Yeah, I guess word
Word
travels
travels
quick,
fast
right?"
around there.
He's like, "Well, you know that City Mortgage's headquarters is here in O'Fallon, Missouri, of all
Wow.
places. It's only like 10 minutes away from where I live." And I was like, "Yeah." And he's like, "And I know you know me. Can you come in and at least like have a discussion with us?" And I said, "Sure, absolutely. I'm always open for discussion." So that's really how it happened. They reached out to me. I went in. They said, "Hey, we've got, there's 3 people besides you that we have a lot of these, we'll call them responsibilities, like divided up amongst for managing the direct to consumer business at City Mortgage," which was huge then. I think we had
hmm
close to, I want to say it was like 6 million or something like that, loans under service, which is monster for a mortgage servicer. They were going through like the HAMP and HAR and like all the like
Yeah, yeah.
modifications, right? And they were essentially recognizing that after they got through all that, they were going to have to go back to like the normal state of business, and they needed expert people to do that. And
Mm,
so yeah, they ended up hiring me. I worked there for, I want to say, close to 2 years.
dang.
I was responsible for all the e-delivery. So I redesigned mortgage.com, which they just did again about 6 months ago. They owned mortgage.com, the domain, which was just awesome.
Wow.
Yep. And so I was responsible for mortgage.com. I was responsible for all of the like demand gen and managing basically the like workflow of the call center environments there with they had a like basically like call operations team. Um, and I was responsible for some of the core product or core marketing programs to the
Dang.
servicing portfolio from retention and recapture. It was awesome. It was
Gosh.
very cool.
That's pretty awesome. It's funny how things build. Like when you look upon your career, I've always found that if you stay in a niche, you can kind of really compound your growth in your career. And you started your own thing, from a couple buddies, then you move into your actual own business, and then you go into First
Yep.
Horizon, and then you're able to bring it and scale it into cities. So
Yeah, it's
um,
wild.
it's pretty awesome. Let me ask you this couple last questions here.
Yeah.
You've been through a couple downturns. You've been, well,
Yep.
three. You had '01, '08, COVID.
Yep.
What is it? What do you, if you're talking to like loan officers or owners of a mortgage company about perseverance or sticking with it or not getting discouraged, what did you learn over like that period of time with
My,
mortgage?
yeah, I would say the thing that I've learned is that, I told you that story about us just, making money like crazy when we were
hmm
young. The thing that I've learned is that you got to just stay lean, and you'll hear that all the time. And I know that, we talk about that with a lot of our clients, and their budgets are, are what they are. But the reality is stay lean, right? Don't let the business get out of control. And I think the biggest challenge that I see in the mortgage business, and I think that it's turning the corner in some places, but it's not, is that there's so many people that actually don't contribute to the bottom line
Hmm.
at many of these mortgage companies, that are just revenue suck. And
Hmm.
so if you're running a mortgage company, or if you're in a place where you're even me, who was not necessarily running a mortgage company, but I was, contributing to lead gen and, conversion, if somebody isn't a contributor to revenue and generating real revenue to that business, you don't need them.
Hmm.
So that's what I've learned, is that over the course of all those downturns, no matter what, is that you got to be a contributor, and you got to actually, I'm going to say, pay for yourself, right?
Hmm.
And many people have lots of different definitions of that, but I feel like that's one thing that I run into very consistently, is that many folks that have started mortgage companies have started them with the aspiration of, I'm going to just be like a figurehead of this business after I get
Yeah.
it up and started. And then I'm gonna hire my cousins and my buddies and
All
people that
right.
have been in the business with me, and we're just gonna run this company, and it's just gonna work underneath us, right?
Hmm.
And the reality is that you're going to continue to get your butt kicked if you're not actually in the mix, and you're not actually doing the work and making money for your business.
Yeah. Yeah. It's funny how that, I would agree with that. And it's very true, even on our side of it. It's super lean. I'm in the business. We're all kind of wearing a lot of hats. And I think that's the way to definitely get through the
Yep.
lean times.
Heck
Um,
yeah.
Craig, we got halfway through.
I
Your
know it.
career is
I
your
know it.
career is awesome. You've got, I mean, the first part of your 25-year career is very interesting. I think a lot of people can get a lot of takeaways about leads, about how to run a company, taking risk, especially when you're young. If you're out there and you're a young loan officer, or you're in college, I still think it's a great industry to be
It
in.
is.
And it's a huge opportunity. You can open up your own, probably easier now than maybe 25 years ago. Would you agree with that?
I would think so. Yeah. I mean,
Spin up your CRM and
you can go to become a broker on, and
yeah,
become a UWM broker,
yeah.
and
For,
really very simply become an independent mortgage broker, and get your
yep.
feet wet and do well in this
Yep.
business.
Yep. I would agree with that. I would agree with that.
Yeah.
Well, thanks, Craig. Thanks for the time. Craig Bredbenner with your TransUnion now. Been around a long time. It's awesome to have you on.
Yeah. Thank
And
you.
thanks for coming on.